like the Canadians did, where you hike, then you stop, you assess, and hike again. And she said, well, we're not contemplating that because we have not paused, and repeated that sentence a number of times.
And Maria, that definitely was a consistent message. You're seeing the euro at 108.8, bumping up against 109 as
Good morning, everybody.
versus the dollar. The sense that perhaps the ECB has significantly more work to do, possibly one, maybe even two rate hikes, even if the Fed perhaps is a little bit more on the fence. Maria, what's your takeaway with respect to growth and how concerned she was in terms of downgrading their growth expectations, but still not forecasting a recession?
Yes, and by the way, Madame Lagarde has actually just walked behind our press point, so I'm sure she definitely is watching Bloomberg TV to some extent. Well, look, again,
so the
she
ECB,
did say that
they
there is
raised interest rates. We knew they were going to. They're in worse shape than we are, so that's what we're kind of listening to right now. We had jobless claims and a lot of things. We're going to look at some price, but I just want to hear what she's saying, and then we'll rock on.
Situation when it comes to growth, and this is something that really puzzles economists at this point, is that you see a dichotomy between the manufacturing and the services. She did say over the short term, yes, growth in the euro area is likely to stay weak. It is not even, and you see this divergence between the different components, which is also interesting because historically, certainly over the past decade, and you know this very well, it was the big industrial countries that used to be the powerhouse, that used to be the engine
let's do
for
this. I got you. So this morning, Bitcoin's bouncing off of an hourly support zone. We've seen a little bit of divergence happening on the smaller time frames, so we decided that we would trade it by getting long at 24,872. Now on the Bitget platform, that price is 24,874 spot 50. So pretty damn close to the same price as Coinbase's exchange. Now, we took profits as this move started to go up because we're at a big figure number at $25,000, and price was looking extremely weak today. So we didn't want to, push our luck a little bit too far, but the trade was there. We took profits, moved the stops to break even. So we're currently sitting in a trade with profits and prices going up. The market is open. It has been open for 15 minutes. This is not a strong hourly push by any means. So you haven't even gotten a close above this candle right there. This is the opening of the day. So at the open of the day, after the fall yesterday around 4 o'clock, we had that drop right at the end of the live stream. Then at the open, we had a nice push up, and then the bearish just came right back in. My opinion on this is when this candle dropped, I would assume that there were a lot of people that had trailing stops to $25,000. All right. As you can see, last week's low is above $25,000. So, yeah, I would say that was what this push was all about. Now, depending on where this weekly closes will be important for us because you can see as of right now, you are trading under the 21 exponential. Someone did say to me that we are just testing the midpoint of this breakout candle, and that is true. It could absolutely find support here, and this could absolutely end up being a bear trap, but at the same time, it has been weak for a long time. It's not extremely weak, but it was weak nonetheless. So I would say when people started to see that Bitcoin could not get any kind of strength going once the guy decided to take out his guns and start shooting at the exchanges, I don't even want to say his name. I'm so disgusted at him, but we'll just say it's the SEC chairman. I would assume people probably said, I'm going to take my money and run. So I'm going to move my stop up to 25K. And that's why we had this initial blast here, back or down to the downside initially. And since those stops were hit, you did get a small bounce, but the majority of the day was selling. Now you can see buyers are coming back in now. The blue is buy orders, the yellow is sell orders. But when we took the trade, before you got this spike, we took the trade on this candle as it pushed down to hourly support. We got long. We just had our stop sitting somewhere down here, and we were just waiting to see if this thing could get a bounce. And that's exactly what happened. This candle liquidated that yesterday's swing low, and you got a bullish reaction. So we assumed that we could potentially see a little bit of bullish continuation from this move. And it was getting pretty damn sticky there for a minute. As you can see right here was when the trade was taken. And then for a very long time, it looked like it was just absolutely melting and was going to drop. But then this big boy right here came in, and that's where we currently are. So we are barely above 25K. As you can see, you're at 25,044. I mean, just above 25K. I would expect sellers to show back up. As you know how they are, they love to beat a dead animal when it's down. So we'll see if we get any kind of bullish price action from here. All right, so this is going to mark the low of the week. Hopefully it stays intact and price just slowly melts up, but that's probably not going to happen. The DXY is down. That is because the Eurozone hiked interest rates. That is strong for Euro. So the DXY is only weak based on Euro strength. So there you go. Taking out yesterday's low, so that's good. I definitely want to see it break down. We do have a line here for some stupid reason. What is that? What is that? What is that? All right, it's a monthly demand. So that's probably where I want to see this month close under. That would be nice. I don't want to see it close above it, as that could potentially indicate that price is going to move higher. So that's where we are on the dollar, right? Pushing down, that's what we want to see, but Bitcoin is not reacting to this. Like, it would be nice if Bitcoin would, but it's just, there's just not enough buyers out there for now. Till you get buyers, until you get demand, price cannot go up. That is the way this works, supply and demand. All right, so if price continues to go lower, it just means people are exiting the asset itself. That's what it looks like on the day. Still a red day. This bounce that we got in on is, it's not a very big one. If you want to short it, I don't suggest you short it because it's at an area of support, right? The midpoint of that candle, this right here is support. See that? That's an old resistance level there on the daily. That's where it bounced today. See that? That's where it bounced. So that's basically the reason why we took the trade. It was just for a bounce. Now on the other side, the FX side, because like I said, we're going to be trading FX a lot more moving forward because Bitcoin is literally just sideways to down. So I did close my short position on it because if I am going to short it, then I want to short it at a higher area with a full size position. But we will see how it plays out. What I would love to see is I would love to see this week close under the 21 exponential. And then I would love to see next week close back above it, as that would indicate that we do have a potential bear trap here. But we thought we had one here, right? And it ended up not working out. So we're not going to get our hopes up too much. But if next week, this could take a few weeks. I'm not even going to lie. Let me go over here and show you. So right here, we had the same signal, right? We were looking for the sell side to continue. But when we broke above this, we had to wait until we got this candle here. So then this week was when we decided to look for sell side entries. All right. So 1, 2, 3 weeks before it actually did what we needed it to do. So when I tell you that this could take time, it could take 3, 4 weeks before it gets back above there. And I kind of hope that's the way it plays out slowly. But we will be taking entries as the days go on. CAD Swissy, I did post this on the Twitter account. The problem is I hit enter and then moved from tab. So I did this, wrote it out, and then hit enter and then switched to the tab. And then once I went back over there, I realized that I did not post the damn tweet. So I posted it a little bit late. Unfortunately, I apologize for that. But this is what I was looking at. You can see clearly there's weekly resistance there. It is being held on the intraday time frame as resist or as support, and then price just, this is the yearly opening range up there, that yellow line. The price has been trading up here for multiple days, and it is looking like it's weak. So after this happened here, we dropped under, broke back up, came back down, and then I was looking to take entry based on that exact price, 0.67719. That was my entry on this candle, pushed up into that area. That is when I hit the sell button, and when it broke down, I took profits. My stop to break even. All right, so that's how it works. Both trades were taken before the live stream could get started, unfortunately, because I was trying to manage two different positions amongst other things. So there we go. You can see just how beautiful that works. If you're new here and you don't know what weekly resistance is, it's the highest close on a weekly bullish candle. You can see there, that's the highest close. We traded into it on this week. We traded well above it on this week, but closed back down. Like I said, this is the yearly open, so it is a very big level. You can clearly see that for 2023, the majority of the price action has happened under the yearly opening range. So any pullback into this area is an opportunistic time to look for short entries. Now, I don't know if you're going to see downside continuation or if you're going to get a breakout, because I can't predict what price will do. My job is to teach you the areas to look for trading entries. Obviously, this would have been the better entry last week, right? But if you'd have taken that entry last week, you would have been sitting in this chop. Now, naturally, you would have taken profits on a big move down like that, but you could see that price did come back up. Depending on where you would have gotten your entry would have dictated whether or not you got stopped out. And then price rolled back over here. So I'm not sure if it's going to continue lower. That's why we take profits when price moves in our direction. Once we hit the sell button or the buy button, we want price to move in our direction pretty quickly, as that tells us that we probably are on the right side for the time being. All right. So if you're ever into a trade and it takes a long time to play out, right? Boom. That's when I took the entry. And you can see that within just a few 5-minute periods, I knew that I was probably on the right side of the trade. It literally dropped all the way down to support in like 15 minutes. So right in there is where I took profits. Just a small trade. That's all you need. You just need, small risk, very small risk on this one. Tiny risk ends up being 2-3% on the Forex side, and Bitcoin, because I use high leverage, ended up doing about 19% on the P&L. So 2 for 2 on the day. Not bad. Other things that we were watching, well, of course, Euro USD. We're bullish on this asset because we think the dollar is going to eventually roll over. And you can see that the Euro USD is getting that bullish push. That's what we want to see. I hope some of you were able to catch this trade. Unfortunately, I could not. I did take it. I just got stopped out. And I have not been able to enter it. So I'm missing out on this boat. Another one that we need to speak on, USD/JPY. This hopefully is a stop run. All right. Because today, earlier, when I was looking at this thing, it was up big. Right. It was looking bad. we was breaking out above weekly resistance, but notice where it is now. That's beautiful. That's what I want to see. I do believe this thing is going to roll over. I was thinking about shorting it, but I didn't want to lower my cost basis, so I did not broadcast that short. But I was looking at this for a short. You can see that that's playing out too. So I wish I would have taken it on the other account, right? Then it would have been, I wouldn't have destroyed my cost basis. But I just didn't feel like switching accounts, and I wasn't sure that I was going to roll over. Yesterday we had the currency futures. Japanese yen opened up way up here yesterday. So this is where it closed, right? 1600 hours. That's 4 p.m. And then it opens at 1800 hours, right? Because it's futures contracts. So this is the settlement period. Then it opens 2 hours later, and it was way up there. So naturally, a pullback was probably going to happen to fill that gap. The Swiss franc did the same thing. It opened pretty much way higher than it closed, came in, filled the gap. Remember, guys, if you're looking at daily time frames, you do not need for this wick to go all the way to the close to fill the gap. Why is that? It just needs to go to the last candle's high. That's gap filled because it traded there intraday. See this? We traded all the way up to one spot, 11575, rolled over. The market closed. It gapped up to there. Price traded down to where? Right there. Boom. And up she goes. All right. Bullish Swiss franc isn't really good for risk assets. There you go again. Same thing. Gap is filled. So people are trying to short this right now, expecting the price to trade all the way back down to there. I'm not saying it can't. I'm just saying, like, if you're using gap trading strategies, you don't always have to wait for that because sometimes you might not get that, right? Gaps are filled once. All you got to do is trade into the previous day's range, and then you've filled the gap. Euro's looking good. It's up almost 1%. Swiss francs up a whole percent. Hence the reason why I was looking to sell CAD Swissy. Canadian dollar is up. So, but the Swiss franc is up bigger than any other asset on the currencies. So on the futures. So basically, this is stronger than that. So when you trade the actual pair, it makes it go lower. So CAD Swiss is, you're trading Swiss franc versus CAD. So whichever one of these two assets is stronger, that will dictate the direction, right? It just depends on if it's the base currency or the quote currency. The first currency is always the base currency. This is the quote currency. So the price that you're looking at over here is this, traded against the Canadian dollar. So base quote. If the quote currency is stronger than the base currency, then you're looking for bearish price action and vice versa, right? If this currency is weaker than this currency, then you look for bullish price action. And we had the Canadian dollar trade all the way up into this. Once again, yearly opening range. Here's the yearly open. Clearly, there's been way more price trading under the yearly opening range. So we look for that trend to continue until you make a fresh yearly high. If you make a fresh yearly high, then you no longer look for shorts because you're going to potentially close the year out bullishly. Now, we are at the halfway point of the year, so a lot of people are starting to think that these things are going to start to roll over. That risk off is going to come back into the market. On the VIX, I don't even have it pulled up. But on the VIX, we are seeing a lot less trading action or a lot less hedging action than we seen a few weeks ago. Remember, a few weeks ago, the VIX was, if you were buying calls, you were paying a huge premium for those calls. because most everybody was buying VIX calls to hedge their long positions. And when that happens, you get a discrepancy in the price. I'm pulling it up now. So we want to go to VIX. All right, so we'll just go out like 26 days, and you can see that there still is a massive discrepancy because the implied volatility is still up big, right? So you can see that it's $2.15 to buy an at the money call, and it's 32 cents to buy an at the money put. People are hedging. They think that the VIX is on the lows. And so that's what they're doing. So if the VIX ultimately does become, or if the VIX is at the lows and it does bounce, then you will probably see the S&P 500 roll over. But you're back at the normal areas before the pandemic. So you can see before the pandemic, the VIX used to trade within 10 to 12 bucks, with spikes here and there, but nothing major. Obviously this was major, but here we are. We're getting back into normal volatility state. Where is this? All right, there we go. All right, so that's that. So we're 2 for 2 on trades this morning. Both of the trades were posted in the Discord. Let me go up here. I just want to make sure. Yeah, all right, so that's good there. This thing. All right, so pull it back up. So this morning at 7:52 a.m., this is what we were looking at on Canadian dollar Swissy franc. This is the weekly resistance right there. So that's what I was posting. People in the Forex room know that when I post a chart like that, that's what I'm looking at. So that was taken. It looks like Michelle took it. She's out break even with a little profit. And then on the Bitcoin side, we'll pull this up real quick. Today at 8:27 a.m., you can see where price was. This is if it's going to bounce. I want to see it bounce here. This line right there. That's where I wanted to see it bounce. So that's basically saying if you want to trade it, that's what you want to look for. Make sure you manage your risk because I don't know that it's going to bounce. That was here. So there's the bounce. And remember, when we're trading this, we're only looking to trade inside the range. So, and if you're doing this on your own, maybe wait for some divergence. Here's your divergence on the hourly time frame. I usually don't care about intraday divergence, but it does play out sometimes. So here's this low. I mean, you can clearly see that to this low here, right? Not the low, but the close. The close is lower than that close, right? Lower, and then on your volatility or your oscillator here, you're higher, right? So that is bullish divergence. So you can look for something like that, and then there was the stop run to take out the low of day, and then you got the bullish bounce. So you don't have to buy down here, although somebody did in the Discord and they made money. But that's when you do that, it's not like the probabilities of being right is not as good. But he was watching the divergence, so they were comfortable with taking the entry there. Obviously, it was a better entry than my entry, But I look to trade inside the range that the market has already provided. So I knew that there was a high probability, very high probability, that price would trade inside of this range, right? And this is where I was looking for the entry. Middle of the range, because that's the candle. This is the price range. This is the range that the market set for. So if I was going to see bullish continuation, if this candle would have closed under, then I would not have taken the position, right? Now, you don't know that. Obviously, you don't know that's going to happen. So you do have to take the entry on the retest. So when the price gets tagged, you hit the entry, the buy button, and you set your stop to be safe somewhere lower. So that way, if you do get a close under, then you can exit the position, right? And you don't have to eat a full stop. But that's just the way price works, right? Here's the bullish move up. See how this candle freaking opens and trades down? It didn't get all the way to the bottom of the range, closes here. Your next candle trades inside of this candle's range. Then you get to pop out right there. And then this candle broke back down into this range. All right. So if you're going to see bullish price action, this is what we call a supply zone. And the reason we call it a supply zone is simple. So here's the range right there. Here's the breakout right here. So if price immediately, the very next hourly candle, drops back into your previous range, that means you have reclaimed back down into the range, and there's a higher probable chance that the next candle is going to stay in this range. This is the old range. This is what's called a bull trap. Boom, down, closes. This is also an area where we take short entries. And if you would have done that, boom, done, beautiful. This is where you would have been looking to take profits if you would have taken the short there or here, right? Obviously, that makes the profitability range much smaller, but you never know if the range is going to break down or break out, right? We don't know what price is going to do. That's why when I tell you that I'm showing you how to find and where to look for trade entries, the most highest probable areas are these areas. So there it is. There's the breakdown, and then that holds support. So basically, we're still trading just inside of the daily range, right? This is the open right here of the day. So you open, you go up, and then you immediately trade lower. Set a low, then hold support, take out the low, then bounce up and get back out of this tiny range. Boom. So when we come back into this area, we're expecting that to hold. And then we are only looking for the price to trade back up to here because that's the range. Now there's a breakout. It closed above, so that's good. We'll see if it can get back up to here. But you will still only be getting to the open of the day. Very small range, but leverage can help you in situations like this. And then obviously, I still have 30% of the position on from down here. So if it does break out and start a short squeeze and gets, up into this region in here, that trade ultimately will pay more than the initial position did. But I don't know that it's going to happen. I can't know. It's impossible for me to know. If I knew, like I said, I'd be sitting on an island in Tahiti or somewhere and not trading anymore because I would already be a trillionaire. But the areas is the important thing to learn. Once you learn how to do that, the sky's the limit. It really is. Because you know that you're waiting for that to happen before you initialize any trade entry. You're waiting for that area to be hit. And you are also aware of the fact of the range that you are looking to participate in. All right. So, like on a daily candle, this is a very small daily candle. Very small. So if this thing closes bearish or even closes bullish, like say up here, it's still going to look like downside continuation, right? Because this is the breakdown right there. So just like I was talking to you about on the hourly, the ranges, if you don't want to be a day trader, if you want to be a swing trader, you can do the same exact thing. The same exact thing. You can see how the ranges fixate themselves, and then these two candles traded inside of this candle's range. So if price drops down, if it gets back above the open here, you're looking to go long, and you're only looking for price to get to there. Now, in this situation, it did not happen, right? It did not happen. So it still would have been a 2-to-1 risk to reward judged by the length of that wick to the downside. But ultimately, this is the range. There's the breakdown, then straight out of the range. So this kind of stuff is what gets people screwed up. That's what makes everybody messed up. It screwed me up too. But like I said, I have no doubt in my mind that if the SEC had not come out with that terrible, terrible news, this would have probably got bullish continuation. And we would have been seeing prices up in here. It's the same thing that happened when Bitcoin separated itself from the S&P 500, right? Remember when basically Bitcoin was trading with the S&P 500, but then the FTX thing happened and the S&P 500 closed a huge bullish weekly candle, but Bitcoin closed a huge bearish weekly candle. It was like right in here, I think. So there was a nice, big, strong, bullish candle. And that is basically when Bitcoin lost its correlation. So we were looking, yeah, it is. So we were looking for bullish entries on Bitcoin because risk was doing that. Had a nice pullback. Look where it pulled back to the previous week's open. So this bearish candle traded inside of that candle, right? It's range. This is the range the market set. But we got a big bullish breakout on SPX and FTX happened. Boom. So that's when Bitcoin lost its correlation, stayed on the lows for a little bit, and then we got the bullish rip. So right in here, and we lose the correlation again. Almost inversely correlated now since there. All right. So, yeah. There's a pretty good, I mean, Bitcoin could be leading, right? Bitcoin could be leading. So if investors are, think about it this way, investors are going to get rid of their what? Most riskiest assets, especially if they expect downside continuation. So that's how Bitcoin loses its correlation. Instead of selling out of the SPY, because the SPY was trading in a range, they basically sold Bitcoin. Let's go ahead and drop that. It's the most risky asset. We'll hang on to the S&P 500, and if it breaks down, then we'll get out of it as well. So they just got rid of their riskiest assets first. Is all that happens. That's why you lost the correlation. So yeah, S&P 500 looking nice and strong on that week, but if you look at it on the dailies, it's not looking too strong. You're still trading inside of yesterday's range. Where do you close? That will be, that will happen this evening. Not exactly sure why that line is there. It's got to be something. All right. It's the old 3-day demand zone or supply zone. So it's the last one too. This price has not been tested since the breakdown. So I don't know if I'd be looking to take a sell position there. You could potentially, because you're so stretched out from the moving average. So pullback is likely going to come sooner or later. 43.95. Since it's a 3-day level, you got to watch the 3-day close. If you get a 3-day close above it, then wait for the next 3-day session to close and see if it ends up closing back down into the range. In other words, if you get the close above here on a 3-day, which is going to happen in 1 day and 7 hours, so that'd be tomorrow. If it closes under this line or above it, wait for the next 3-day close. See where it is. Does it close above or below? Because if it closes back below, then you can look for that area as a retest sell. Look for price to go down, just for like a day trade. Nothing major. We are starting to see some things happen. Jobless claims are up. Jobless, right? That's kind of like unemployment. It's the same as last month. Someone said that it was 266 last month or last week, but it is lower. There's the ECB hike that we were expecting it to go up 25 basis points. It did. But there's that. Philadelphia manufacturing, it's lower, negative 13.7%. That's not good. And then down here, retail sales, that's a good print. It's not great, but it's better than what they were expecting. They were expecting negative 1%. It's actually 0.3% in the positive, which is, higher. So it's still, people are still buying stuff. A lot of news today. A lot of stuff for the markets to digest. But we are expecting these things to start looking for support soon or to pull back soon. They don't have to. They can keep going. If people keep shorting it, then it's going to give it fuel to continue to raise higher. All right, let's do this. Yeah, right there. He said it. Jobless claims come in at 262 after being 266 last week. I don't know where he's getting that from. There it is. It says 262, right? Not 266. So I'm not, maybe another platform he's looking at has a different number. I've seen that happen sometimes. Doesn't happen often, but sometimes. But anyways, that's where we're at. That's where we're sitting, nice and pretty, like we like to be. Make money, get in, get out, and watch the day do whatever it's going to do. There's the VIX, says it's up 1.87%, so it's not up very big, still trading inside of yesterday's range. So if you don't close above yesterday's open, then the probabilities will be that the VIX will go down the next day, depending on where today closes. You did get a little bounce, but this candle right here puts you right back in the range. You can see basically how those candles opens here are basically where price is now. It's just range trading. It's simple. You just got to know what you're looking for. Ethereum's down. Everything's down in crypto. They're still up on the year. Let's not make no mistake here. Like I said, it looks weak. It looks bad, but it still can turn around here. I didn't want to see it get back down to 25K. All right. It's the breaking of a near-term trend. The near-term trend was up over here. There's your pullback, and then boom, you broke it. This breaking down here breaks the near-term up trend. But I don't really care about trend lines that much. You know what I mean? because prices, it trades in ranges most of the time. It's every now and then you get the nice, continuation moves to the upside or to the downside, but most of the time you're trading inside of a range. And the way to identify that is to look at the higher time frames, and that'll give you a better idea of what you're looking for. Right? So this candle gave us that what we were going to expect would be continuation to the upside here. And then the next week, it did not. It opened, traded up for just a little bit, and then the rest of the week just broke down. So basically, when you get under the breakout candle, your breakout is over with. It's done. And it never came back and retested it. It did on Bitcoin because I took that short, but it was on the 2-week time frame. So when we broke down from here, that's where I took the short, a retest of that price. So here on Friday, I was expecting it to run that day's high, but it didn't. But I still took the entry at that price. I just had my stop setting above that high, and it worked out. But I closed that short. I closed it out today. Yeah, I closed it out because it wasn't making very much money. Once you take so much profit, once you take profit once and then twice, if you take profit again the second time at 70%, then that's 70% of the initial 30% that you left on. The position size gets very small. So even if you do get downside continuation, you don't really make a whole lot of money. So like at that point, it was literally just like $100. And I was like, well, let's close this out and make a quick 18% today. And we get it up. Got the P&L up right now. It's looking good. Looking good. As far as the CAD Swiss trade, I don't know if you're going to get downside continuation because there's a support right here. And they're also getting ready to tag the 21 exponential. So the near term looks like an uptrend, but the yearly range is down. You're bearish on the year. So if you look at your yearly candle and get rid of all the lines, your yearly candle is bearish. You see? And also, like, the upside of that candle just traded up into there, which would be considered a heat level or a supply zone. And boom, down she went. You just need to be aware of your surroundings, essentially. Right there is where it tags that supply zone, and it trades in a range for a very long time and then breaks down. Range, down, up. This could just simply be a bounce. So we'll keep the position open until we get stopped out of it. If we get stopped out of it, then we'll know we were on the wrong side of the market, but at the same time still made money. So you don't have to be on the right side of the market to make money. You just got to know where the high probable areas are to get those bounces. And a bounce can be looked at as a short or a long. When I say a bounce, I'm talking literally bouncing off of a specific price point. So if it's bouncing to the upside, if it hits it to the upside and drops, that's a bounce, right? That's a bounce. Hits it and bounces off. Same for the upside. If it comes down, hits it and bounces off. So whenever I'm saying bounce, it can be both bullish or bearish. Not many questions. Which broker do you use to trade Forex? I have two Forex brokers, Forex.com and Oanda. Oanda is my main account. Forex.com is a small account that I use to play around with, trying different strategies, things like that. I was going to basically, when I set the account up, I had one intended purpose. That purpose was to just basically do daily reses and daily support trades only. But I ended up, I screwed it up for like a week and a half, and then I just said, screw it. I'll do it again later on down the road. And then I was just going to like publicly put the results out. Start it at like $300 and grow it, like double the account twice, and then be done with it all. Show you the profitability, how profitable it can be. But like I said, I screwed up the entries because I started doing smaller time frame entries on it, because I have a bad habit of not realizing which broker I'm using at the time. So like I did the same thing on Bitcoin. I actually bought the absolute low of Bitcoin. I mean, it's on film somewhere. It's recorded and out there. I don't know which video. I got over 400 videos, but we bought this, right? So we bought the absolute low on Bitcoin. All we did was we waited for that low to get liquidated. We bought it. Stop under there. And then I accidentally screwed up the cost basis because I wasn't paying attention which side of the platform I was on. I thought I was taking a trade on the Tether side of the platform along, I can't remember where it was. Maybe it was here. So it ended up bringing my cost basis like up. So yeah, it screwed it up. And I was basically just going to hold it for the entire year just to see how it worked out, to see if I caught the low of the year. I mean, I did, but I'm not sitting in that position still. That position is gone because I fat fingered it. I have a bad habit of that. But yeah, Forex.com is terrible. It has terrible spreads. Oanda is, as far as I know, they're accessible pretty much all over the world, but they are a U.S. broker as well, so that's why I use them. There are many Forex brokerages out there, so you just got to. It just depends on where you live, what brokerages you will have access to, right? But Oanda's a big one. They're one of the biggest in the world. NZD Yeah, so the BOJ isn't doing what we thought they would do. Me and a couple other traders, we were expecting the BOJ to start tightening up their monetary policy. So that's the reason why I got short the USD JPY. But they haven't done it yet. So New Zealand's actually weak, but you can see that it's up on the year versus the Japanese yen. This has to do with yen weakness, not so much New Zealand strength. There's NZD USD. All right, so it's in a bearish trend. It's sideways to down, right? But it's in a bearish trend versus the dollar. Versus the yen, it's in an uptrend. And this is, like I said, based solely on yen weakness. Other assets that are strong versus the yen, like they're up. Like Aussie yen, it's up. It's up pretty big. This has a lot to do with people shorting. Right here. Aussie yen is the heaviest shorted asset in the Forex market. And this is IG. I don't know if they're still in America or not, because when I click on Daily FX, it says that I can't access the site because I'm in America. I don't know what that's about, but it's the heaviest shorted currency right now. And IG, they put out this sentiment, this client sentiment, because 74% of their clients lose money trading. 74% of IG's clients lose money trading. So they put this guide out so that way you can essentially take the opposite side of the trade. Now, obviously, it doesn't always work. Everything works in trading, just not all the time, right? But Euro yen and Aussie yen are the two heaviest shorted assets. And look at it. It's going to the frickin' moon. And here's Euro yen. Look at it. Making fresh yearly highs. Today, fresh yearly highs. That's because retail is short. They keep trying to short the top. So it keeps trend moving up. Yeah. That's the reality of the situation. So what should you do? Well, wait for a pullback into support. Right there was support. That would have been the main area to watch for long entries. Wait for the week to open as this week opened, and here traded into it and up it went. Right? IG sentiment, baby. 74% of traders lose money on their platform. That is pretty consistent across all platforms. So when I tell you guys, that means 74% of everybody loses money. So that means 74% of your YouTubers that you're watching lose. 74% of your Twitter guys that you're listening to lose. 74% of them. So the majority of the people that you follow and are subscribed to lose money. That should put things into perspective. So be careful at who you follow, is all I'm saying. Or, I mean, you can follow them, just don't take their advice. Or take the opposite side of their trade, like the inverse Kramer ETF. But I get a lot of this stuff where I don't actually follow someone, but I still get their stuff somehow. What is this? I'll look at that later. That looks interesting. Yeah, so Aussie yen, New Zealand yen, they're going up because they're being shorted. Let me go back up there and see how heavily shorted New Zealand yen is. They don't have it up there. I would say it's probably USD JPY's retail sentiment is also long on USD JPY. That sucks for my position. Anyways, I don't see New Zealand yen up there, so well, anyways, we can look at New Zealand yen and we know that it's into a monthly resistance level. So this if this falls back under here, and you can find weekly, you got a weekly resistance up there, but it was a trap, so you revert back to the last old weekly resistance, which is here. So you'll know by tomorrow at the close if this is going to potentially break out or not. If it trades and closes back under this line, then this line will be an area where I would be looking at for potential shorts. But we'll see how it closes. If it closes above, then it's a breakout, potential breakout. New Zealand trades crazy sometimes. It's not one of my favorite assets to trade. Like New Zealand and Swissy do this a lot. Like, that's freaking impossible right there. I mean, it's garbage. It's still pretty much stayed within the main range, but it makes it difficult to trade when it's not respecting the areas. But ultimately, it did respect it there, because the next week was a massive down week. But it trades choppy a lot. very choppy, and it's been choppy. This is a weekly time frame. This is your yearly open. So that's how much time this thing has been in this range. So if it does break out to the upside, you could potentially see it hit prices up to like 93.5. That would just be a measured move of a breakout of the range because you're trading up. So usually I like to be like, I would much prefer to be the buyer at support in a situation like this because you're at above the yearly open, but you're also moving up slowly, range bound, and then up, range bound, up. But it could break down. I'm not saying that the short won't work. I'm just saying that you want to try to take positions on the side of the trend. Obviously, I took a position against the trend on Bitcoin this morning, but it was just a small scalp, a intraday trade. But usually it's better if you take the positions like with the trend. Wait for support and then look for longs. But we'll see how this plays out because New Zealand is a risk-on currency asset. So if the markets do roll over, if we do start to become in a recession, these assets are going to get killed. All right? They'll get killed. So it might not be a bad idea to look for short entries if this week closes back under 87,165. Next week, you can look for a retest of that price. You don't want to take the first chance because you could get a run above last week's high. Wait for price to get back down in the range, then you sell it. Manage your risk off of the intraday time frame. But it depends on how it closes this week. All right. Do you think today just the liquidation spike and roll over? What are you talking about, John? Which asset? Which asset? Because a lot of assets are making fresh yearly highs. A lot of them. I have to be, you have to tell me which one. Like this could be a liquidation and roll over. Because it just took out this highest week right there. It just took it out. SPX, is it liquidating? Yeah, it's liquidating, but it's liquidating big. On the daily, I mean, I would wait to see. This is the thing. Like, it needs to close back under this candle. If it closes above it, then you have bullish. You're still bullish. You got to wait for it to close under a bullish candle before you can even say that resistance is happening. So like in this case here, if you would have been, all right, this candle closed and this candle was bearish. So anybody that was looking to short this line was obviously wrong because it closed up. Next day was an outside day almost, and then another one up. So the markets do play games. It doesn't always work out beautifully. S&P, yeah, I mean it could. If today closes under 43.83, then watch 43.83 moving forward for potential short entries. Or if you're gonna sell or buy puts. How expensive are SPY puts right now? Not very. That's implied volatility is low on the S&P 100, S&P 500. This goes up when the price is going down. So if you do want to short it, I would go far out, like a month, over a month. They're they're buying calls, more calls than puts today because the calls are more expensive than the puts. But you could buy like, if you go way out, you can buy a couple strikes out of the money I wouldn't go very far out of the money but when you have open interest and when the implied volatility is low like that, if S&P does roll over, then the implied volatility will go up. So you'll make money on that, as well as the fact that price is moving closer to your strike. You just got to be careful, but 14% is not high. That means, the premium is well priced. You're not paying too much. When implied volatility is above 50, you're paying too much for the premium. The implied's got the premium jacked up too high. So even if you're right, even if price goes in your direction, you could still lose money on it if you're not out far enough. Like we almost lost money on that TTWO trade. We almost lost money on it because it was literally 2 days before expiration that it broke down. And since the implied volatility was up on it, we paid a higher premium for it. But it traded range bound for so freaking long. It finally broke down, and that's when we took the trade off. We were like, because I didn't want to wait until Friday. And if you did wait until Friday on expiration, you lost money on that. Because that put closed at like $1. And we paid $1.90 or $1.85 for it. But if you would have sold it on this day, you could have sold it for a nice profit. Could have sold it for like $2.50. That's making money. You bought it at $1.85, you sold it for $2.50. Not bad. But obviously when people trade options, they want those 100 and 200% gainers. You gotta be really good at your game to do that. Or have something drastic happen and help you out a little bit. Like the biggest option trade I ever made was 1,100%, and I got lucky as hell. I bought out of the money calls, like 3 weeks out on an airplane stock. And then something happened, some news broke, and it went up, like it shot up like a rock. I can't remember the exact which one it was. I do know that it was inside the Jets ETF. I don't know if it was Love or AA, American Airlines. I can't remember which one. But some good news happened, and I got lucky as hell. Because the implied volatility shot up on it and everything. So that option, like I bought it for 49 cents. Like the cheaper the option is, that means the option market is telling you that there is a lower probability of making money on it. Right? Because if you can buy it cheap, it's very unlikely to work. So I just got lucky is all. I mean, I was trading the strategy. I was buying support essentially because it was in an uptrend. But the news that came out, it really helped it. I think I bought like 14 strike calls and price shot up to like $18 in one day. And when I bought the 14 strike, I paid 40 cents for it. Like I said, it shot up and I ended up making 1,100% on that one options trade. But it was basically luck. If that news would not have came out, then that option would have expired worthless. Right? But that was a long time ago. It was a few years, 3-4 years ago. This is before I had a YouTube channel. I don't do a lot of options trading and stuff like that because I'm just trying to get people to learn how to look for the right places to even look for trades. So like this was a perfect example, right? So when price was trading at like 140, we went out to June 9th, I think it was. Yeah, June 9th. So we bought it on May the 18th. June 9th. So it was like 3 weeks away. and we bought the strike 135. And the reason that we bought the 135 strike was because it was it was inside of this candle's price range. So alls we needed for was price to break down lower than this candle's low, and we would have made money. So technically, you could have sold it for a profit on that day if you would have nailed the low. But this day was a good day because it made that 135 put go up just based on intrinsic value. It had already lost all of the premium from the time decay and the implied volatility. All of that was gone. So literally the only reason you made money on it was if you sold it near the lows of the day is on the intrinsic value. Just be careful trading them. Don't like buy way out of the money stuff. Those strategies very rarely work out. When they work out great. But now that the VIX is low, as long as as long as it's not something like Nvidia or something that's flying to the moon, you know what I'm saying? You can start hedging some bets. Nvidia's options are probably expensive because it's so bullish. Well, it's getting lower now. It was up in the 90s a few weeks ago. It's getting lower, but this is from the VIX. So the implied volatility is still jacked up because this asset is literally just mooning. It's just mooning. People are trying to short it and they're getting stopped out. Will that gap fill? Probably someday. Yeah. But it'll only be when when you get something like a gamma squeeze or something. As of right now, this thing is going to continue to go up. People, when you buy puts on an asset that's climbing, the market makers that sell you the puts, that means they sold you the puts, so they're naked short, right? They're naked short, so they got to cover that by buying stock. They're making money on the spread. So they sell you the option, the put, and then they go and buy calls. Or not calls, sorry. They go and buy stock to offset the position so they be delta neutral. That's why a lot of people, that's why they just, wait for resistance to be shown. It did hold resistance for a little while, but then it just broke out. Boom. It's so bullish. Just leave it alone. Don't buy calls up here either, because eventually, once enough people take profits on this thing, I mean, you're making fresh all-time highs, fresh yearly highs. Look at this trend from year open. It's literally straight freaking up. Straight up. That is parabolic. That is not a normal trend. When an asset's that volatile, you need to stay away from it. At least, or if you bought it, around the open, then you're doing good. The open was 148.51. This thing's trading at multiples above that. I'm interested to see Nvidia's. Let's see how the option market's pricing next week. Yeah, perfect. Great. Love it. Internet's spinning up. You're trading so the options market priced this weekend lower. This is where the option market was pricing. You're trading way outside of the expected move. So anybody that sold calls up here, they got rocked. Anybody that sold puts here, they're done. That is a breakout right there. So this could be a liquidity run. The options market will price wherever tomorrow closes. So tomorrow closes like around 420, 417, then the options will be up here. That's where they'll be pricing next week. Each one of these is a week's worth of range. So the options market was wrong. They get it wrong sometimes. Here's the day they got it wrong. 2 days it went out. Most of the time it stays with inside of it though. Gets above it slightly here and then pulls back. Big breakout here. Same thing. It looked like it was going to be rolling over. So people, they sell this. You know what I'm saying? They sell 244s or they buy 240s, 241s, anything, because it looks like it's topping out. It looks like it's rolling over, and boom, that is stopping people out. Like I said, when they sell you those things, they have to buy stock in order to hedge their position. Add that with the fact that everybody was buying Nvidia because of the AI hype, you get a parabolic move to the upside. So it will cool off eventually, but you got to wait for it to start cooling off. Bitcoin's rolling over, so it's unable to get up above. It's unable to do anything. That $25,000 area is a very important area. So it's weak. It cannot maintain anything above that. It hasn't even tagged intraday resistance yet, which would be there. 25074. It might later on today. This is what it looks like on the 5-minute. Ugh. Just be careful. All right, we'll go ahead and wrap it up. Not very many. Oh, there's some questions. S&P liquidate yesterday's candle, then roll over. I don't know. Listen, it's the same thing, right? It's the same thing. So, yeah, it's possible. Let's go over here and pull up the SPX. Probably not. So, like, here was a spot where it looked like it was going to roll over, but ultimately it found support and rocked to the upside. So once again, people were selling here, though they shouldn't have been, because the options market was pricing in a higher range for this week, and they were big time wrong again, because you got 3 bullish candles trading outside of the expected range or the expected move. I mean, it's possible, but it's not a high probable trade. I'll tell you that, right? Just see where today closes. Today needs to close back under this. And if it does and closes bearish, then maybe you can watch resistance the next day. I don't like shorting things that are making fresh breakouts. Like, this day was higher. This was a breakout. Every day since has closed higher. Every single day. So every single day people have been trying to short it, and it's just going higher and higher. So the people, like the The macro analysts have been wrong all freaking year, right? And they just stick to their bearish bias. Are they traders? I have to ask myself, like, how are you short? How are you getting short? Why are you still getting short? Like, you've been wrong. It's at some point you got to change your bias. That's why it's continuing to run up. So many people are thinking that the bear market's not over. It's coming back or whatever. And they might be right. But for 6 months and 15 days of this year, they have been wrong. But a lot of people are expecting this low to be taken out. So they are trying to short it. And in a sense, causing it to go higher. Wait for a breakdown, you know what I mean? Wait for that signal that shows you, yeah, like a big bearish engulfing. And then the probabilities of a short trade might work a little bit better, but still you're going against the trend. And it's getting vertical now. So like you can see how the moving average was just basically caressing price, and now price is leaving it behind. That's a short squeeze. Whenever you see that occur, that's a short squeeze. And when a short squeeze is happening, you don't want to participate in that. You don't want to be one of the guys getting ran over. But I do understand everybody's wanting to short. It's because of the macro analysts on Twitter and YouTube calling for like another credit crisis or a bank crisis or whatever crisis. It's just not happening yet. Let's check the overall market and just see. Yeah, that's mostly green. That's not bearish. That's not bearish. Now, if you look at this versus the crypto, it'll be exactly the opposite. Everything will be red. Most everything will be red. That's bearish. The crypto market is bearish. Risk market is not. Not yet. So just wait for a top to be put in before you start looking for shorts. That's an expansion week. 1, 2, 3, 4, 5 solid weeks you've made a higher close, higher close, higher close, higher close. You got to wait for a down close first, and even then you might not be right. So be careful. Just make sure you manage your risk if you're going to take it. Like I said, I would watch that price right there. The fact that it's still trading above yesterday's high. So you can pretty much, like, if the dollar's going lower, risk markets are going to go higher. The dollar's breaking down. It's going lower. The time to short the markets was here. This is going lower. Right? This was the time to look for shorts. This is going lower now, so yeah. I'm not even on the daily. This is what I meant to be on. It's breaking down. And starting to get some speed too. Look at this day's candle. You traded all the way up to yesterday's high. Not quite to it, but close to it. And look where you are now. You're into daily support, so it could stop here and pause, but I would be looking for shorts around 103 if it does bounce here and go back up. I'd love to see this thing make fresh yearly lows, because if that happens, then you're probably not going to see a bear market in 2023. 2024 maybe. But US 30, It's been range bound all year. It actually looked like it was going to be bearish, but it's starting to gain strength, man, because the marketplace is picking up. When most of these things are green, that's good for the overall market. That means the S&P 500 can continue to go higher, especially when the small caps start to move. Yeah. All-time highs on Apple again today. Amazon sideways, but it'll break out to the upside potentially if the markets carry on. It didn't quite get to support, but it's struggling. It's trading inside of yesterday's range. Google, not at all-time highs yet. Microsoft, oh, so close, making all-time highs. So close. These are the stacks that are essentially keeping the markets up. But if the small caps catch up, poor space. I guess too many people aren't looking to take billion-dollar rides in a spaceship anytime soon, huh? Oh, that sucks. Because I bought that bitch at $10. Losing money there. Tesla just mooning right now. I don't think I'd be looking for shorts on the S&P 500 just yet. Wait for that bearish signal, that breakdown. Then look to short the pops. Did you look at Intel? Yeah, I was telling people to buy Intel because it was bouncing off of the yearly opening range. Where's it at? Where's it at? Right there it is. Look at that bitch. I mean, I was telling people to buy it. This thing hasn't gone yet. And those were my exact words. This thing is still trading inside. So now that, Microsoft and Nvidia are pretty close to all-time highs, they're going to look to take profits, and they're going to rotate those profits into this one more than likely, because this is a good company. It's a chip maker. Look at that. I mean, a flawless test of 2707, and you're trading at 35.92 today. What a phenomenal buying opportunity that was. Perfect. Boom, boom, boom. Right there. That's where I told them to buy. If you want to buy for the whole craze of AI, I would look into Intel because it's still trading at the yearly opening range. And there it is, breaking out. So if the markets continue to run up, then this is going to be, you're going to wait for a pullback on this as well. Buy the dip, but make sure you're buying the dip at supports. Daily or weekly supports. Have I ever looked at Ripster Clouds on TradingView? Pretty cool indicator. No, I have not. Ripster Clouds. Which one? EMA Clouds? I'd say this is it, because it's got 8,000 people using it. I don't know if my internet will be good enough to pull it up, but we'll see what it looks like. Maybe it's only on the daily. Yeah, that's what it is. My internet sucks. Actually, I'm not sure if it's my internet or freaking Google. Yeah, it is pretty. Yeah, I've never seen it before. I mean, it looks like other indicators, kind of, sort of, but It's not bad. I'm assuming this is going to be the 200. Yeah, these things work good when, I mean, when you're in a trending environment, but not so good when you're sideways. Uh-huh. Yeah, that sucks. No, it hasn't made a death trap yet. So maybe it does find support. We hope it does. Obviously, I still hold my Bitcoin, so I definitely want them to go up. Thoughts on QQQ? I'm looking for it to pull back somewhere, right? The problem is where? You're trading above weekly resistance now, so this is the area where I would have expected it to hold, but it didn't. It broke out. This candle is roughly around the midpoint of that area, so that's probably going to be a legit breakout. I would say 15,282 will get hit. But I mean, I know this ain't the Qs, but it's the same exact thing. It's just the Qs are lower priced. Yeah, it's breaking out above resistance. That's a big level right there. So that's going to be monthly res. We got a few days left on this month. So we'll see. 15 days. Does it close above or below? If it closes below, then maybe this is where we can see it start to look to at least pull back into the indicators. Like down here somewhere, 354, and then buy it. Everything's rocking and rolling, man. Everything's going the right way. Yeah, we looked at Intel and bearish on the sidelines. We'll roll over. This is an AI bubble. It's very obvious. Yeah. But the problem of being bearish right now is you're not going to, I mean, you got to wait for it to roll over. Something like this, right? You need something like that to happen. Big bearish engulfing there, tested the Heath level. That was a perfect sell signal right there. So if I was going to be bearish on the marketplace, that's where I would have sold it. Right there. At that price, 1878. And then hold it. See what happens. Put your stop up there. Or buy puts. Whatever. But you just got to wait for a technical breakdown. And then technical resistance needs to hold. And then you need to see some continuation. The first breakdown below support would be a good idea. But it's going to, it's going to struggle there. See, today it's just trading inside of that. Right here's the daily open. So it traded right up to that Heath level. That would have been a short entry. But down here is support. Daily support. So, I mean, you can do something like that. And then if you're right, you'll get downside continuation and you will be sitting pretty. But it's hard to short something that's on fire to the upside. And it was a tech bubble. It was a tech bubble. Your lower cap stocks are starting to turn green, right? Like no one's buying UPS because of freaking AI, right? Nobody's buying CVX because of AI. Nobody's buying Walmart because of AI. Target because of AI. That's what I'm trying to say. If this continues, it's going to lift the whole marketplace up. Then it won't just be AI. You see what I'm saying? If everything was red except for Microsoft, Apple, Nvidia, Amazon, shit like that, Tesla, then I would still be saying this is only an AI bubble. But the more days that we get like this, it is not going to be an AI bubble anymore. Investors are clearly rotating capital. So like when everything was red except for like 5 or 10 stocks, then you could say it was an AI bubble. But when the rest of the marketplace picks up and it starts to get green, you can no longer call it an AI bubble. That's why I'm saying be careful on the shorts. I'm not saying that those macro investors are wrong. They probably went to college and got a degree in economics and all kinds of stuff, right? They're probably right. They're just early. Or maybe they end up being wrong. You don't know. We don't know what's going to happen. Nobody does. But we can see money pulling up because other stocks are starting to get green. Other stocks are starting to get green. I mean, I was looking for Meta to roll over too when I seen the Japanese yen get strong and the Swiss franc get strong. I was like, okay, we might be getting ready to see, all these tech stocks roll over, but nope. They have continued to be completely parabolic. But it's when the rest of the marketplace gets green, these are all value stocks. Value. And look at it, it's mostly green. That no longer is an AI bubble. That means people are starting to invest all across the board. And if they are going to invest all across the board, that's just going to help the marketplace move up, right? It's just going to give the whole marketplace more strength because the indices are a basket of stocks. They are a basket of stocks. So this one right here, it doesn't look like it's the Russell, right? But it is the Russell. But that if you're looking for shorts, wait for a sell signal. Like here, like that's pretty good pullback, right? And then on the push up, watch resistance. Unfortunately, you didn't tag resistance. So you probably wouldn't have been able to get into the entry, but yeah, you need something like that. This one is struggling, but at the same time, we don't know yet. We'll have to wait and see if Bitcoin is leading and people will basically start taking profits soon and looking. It just depends on what happens with the economy. That's all you can say. The XMC put out a video yesterday or the day before. Here, let me pull him up here. This guy. Now, I want his channel here. He makes a very strong case for the bearish market. Where is he? There he is. So these videos right here, right? Recession roundup. Right through here. This time is not different. He makes a really good, he shows you a lot of data, right? That shows you that it's going to be a recession. There is going to be a recession. But I don't know if there is going to be. It doesn't look like there's going to be. I mean, if the market's making fresh all-time highs, can there be a recession? Even if all the data points say that you're going to see a recession or you're going to be in a recession, price is all that matters to me. Like, I don't care about anything else other than price. Price does not do me wrong. I do not need to know about macroeconomics to know whether or not I want to be in a bullish trade or a bearish trade. All I need to do is look at price. And by following price and doing what price says, yeah, I have a few macro theses of why I was bullish, right? But ultimately it was price action that made me take bullish positions. And I set in them. If I catch a trend, like if I'm lucky enough to buy a low, boom, yay, right? I'll hold it until it rolls over. I'm setting in USD Japanese yen long right or short right now from here. So, I mean, I already took profits on it. I'm losing a significant amount of unrealized P&L the whole time it goes up. But ultimately, I do want this thing to roll back over. But ultimately, price is saying it might not, right? We'll see. This has been about the best look. This was a good look, but it ultimately got bought right back up. So this is about the best look for potential rollover that I've seen on it since it bounced off the early opening range. So I'm going to hold the short, but I guess if we break out, I'm going to have to sell it. I'm going to have to close the position, not sell it, but buy back the stuff because I don't want to lose the unrealized P&L that I have on the trade. If you're short from there, you definitely want to see this roll over. And if this does roll over, that's going to be like consistent with bullish markets. If it continues to go higher, then that's consistent with potential bearish markets. I think it's going to have a lot to do with this thing right here, what it ends up doing. Yeah, XBT. EMA on XBT looks like a test of the daily. I'll check it out later. I just joined the stream. Has anybody gotten a notice from Bitget that you can't trade anymore as of today? Not able to access Bitget after July 15? Was it an email? Film Garden, was it an email? I'll ask you in the Discord. But if that's true, I haven't gotten it. I haven't gotten no email. That would suck. I'll ask my guy, but I think he's asleep because he's in Singapore. But talk to me about it in the Discord, dude. That would suck because I got a significant amount of money over there. Did you see the Discord message? No, I did not. Where did you get that at? Like, was it on the platform? I haven't seen that. Due to recent regulatories, Bitget will not be able to provide service region after 9 p.m. June 15. Your account will be restricted from trading after June 21. You will not be able to access Bitget after 9 a.m. on July 15th. Close any open positions in your account as soon as possible and withdraw all your assets from Bitget. If you're not in any restricted country, complete your KYC verification before the above dates. All right, so, bro, if you got that notice, I would definitely be taking your money out. I have not gotten this yet. Is this an email or did it pop up on the platform? Yeah, I don't have an email, but I don't like it. I don't like that at all. All right, let's wrap up the stream so we can get this situated, figured out here. But yeah, if you guys are listening to me right now, if you get that, definitely take your money out. Don't leave it in there because I mean, yeah. And someone said MEXC is still accepting US citizens. Well, KuCoin, like all of those things are probably going to eventually do the same thing. That's today. All right, so let's wrap this up. I got work to do. I got to contact the dude over on Bitget and see what's going on. You guys have a fantastic rest of your day, and I will see you Sunday morning and then Tuesday morning. Thank you guys for your time. Make sure you all trade safe, trade smart, and as always, happy trading, everybody.